Good afternoon, everyone. In this video, we'll walk through a live setup in the S&P 500 futures. Now in 8 to 9, we've had this rally, this 8 to 9 a.m. Pacific hour, and this was the volatility catalyst. We had Waller come out, he gave out a piece of news, which then moved the markets. Now, as of right now, we're seeing price has rallied into the upper edge of our volatility box lines. Now I'll pause right here. If you haven't already seen the video that breaks down the fade setup, I'd recommend you watch that before continuing. The basic gist is, once price action hits the upper edge of our volatility box lines, we're now waiting for the edge signal confirmation. Now, let me hit pause here. You can go ahead and review that video, and I'll take you through where the edge signal actually prints in the S&P 500 futures here. Now, a few minutes later, we're seeing the edge signal giving us the indication we were looking for. We're officially in overbought territory, which you can see through the red arrow on our charts. The fade setup rules have officially been met, and now we're waiting for our entry. Our entry is at the cyan entry line. Our stop is outside of the green cloud since we're looking at a short side setup, and the distance between that cyan entry line and the outer edge of the clouds, that's the risk we have to give this trade. That's the same amount we're looking for our first target, so getting a 1-to-1 risk to reward ratio. In the case of the S&P 500, that was right around 11.5 points today for this particular trade. Now, some other ways for those of you that want to reduce your risk, you could either use micro futures or do something like buy a SPY put option or short the actual S&P shares, something like SPY, which allows you to scale in based off of the risk tolerance that works for you. Either way, this is where the setup rules are met, and now we're waiting for a retest of that cyan entry line. So let me go ahead and pause here, and I'll resume the video when or if we do get that retest. Alright, so now you can see that price is coming right back into the cyan line that we were looking at for our entry, and this is what we call the retest. This is where the entry gets filled. Everything about the trade remains the same that we've already discussed, both in terms of stop and target. This is our way of ensuring that we get an entry that allows us to manage our risk to reward ratio. So now all of the rules of this trade have been met. I'll let the rest of this trade play out in terms of seeing how price action actually progresses as we move on, either hitting the stop or the target. That should give you an idea of how price fluctuates. And what you'll notice in this particular trade is price does move against us, so there's a little bit of heat that you have to deal with, and this gives you an idea of how much heat that is as well with regards to the 11.5 risk that we had to endure in terms of putting on this trade. Now the trade is finally getting close to our first target. Once we cross this green line, the first target, that's where we now have hit the first target that we had for this trade, and we can manage this trade with a little bit more flexibility. The stop is moved to break even, meaning the cyan line, so now the outer edge of this risk gets shrunk substantially. You're playing with house money essentially. And we're now looking to try and see, can we hit our second target? Our second target is the gray target line on the opposite side, where it allows us to see, do we get a home run out of this trade? Now in this particular one, we got very close to that home run trade, but we didn't quite hit that gray target line. So the stop got taken out at break even when price reversed, but this gives you an idea of how price went all the way down almost close to that gray target line before reversing. And a lot of times when we do get that home run trade, it works out really nicely, which I think more than makes up for the times where this trade reverses. Alright, I hope you found this video to be useful, at least giving you a visual walkthrough of what that fade setup looks like, how does price react to the volatility box zones, and how does price then move in terms of trade management along with just going away or even into in terms of the heat you'd have to deal with on any given trade. We also talked about a few different ways you could manage your risk a little bit better for those of you for which the full size futures is a little larger. And you hopefully got to see what home run trades also would look like in terms of the specific levels we're looking to get hit. Again, in case you're interested in learning more around the futures volatility box, I'll leave a link to that in the description box below. Should give you an idea of other trades as well in terms of walkthroughs, ideas, what the typical risk is, all of that good stuff. Take care everyone, good luck trading, and we'll see you in the next update.